Yeah, everyone doing a sound check. Let me know that you're hearing me all right. Okay, folks, we'll get started here in just a minute. Just getting a couple last things set up. Hey folks, welcome. Just checking out this full screen. Can you guys hear me on this screen now? I've had trouble with this in the past couple live casts. Just want to double check that, then we'll go on. So let me know if you're hearing me just fine on this screen. Thanks. All right, awesome. All right, folks, thanks for joining. We got about 120 folks. Usually get 500, maybe 1,000, who knows today. There's a lot going on in the world, but not very much going on in the markets. We did get a little bit of a bid about a half hour ago, and we've traded up into some of the next levels. And I'll be going through quite a few things today. I'm going to be going through the equity markets, the spreads, everything I talk about in general on the channel, on the daily videos and all that kind of stuff. It's been kind of funny with the daily videos because I'm trying to figure out how to streamline and gain back some time, and it's just not working. So I went back to the old school ways, or at least the way I was doing them before. So hopefully you're enjoying that content. Make sure you hit the like button so not only I know you like it, but YouTube knows as well. Some of the things that it was interesting, I just saw I have my phone up here watching badges and alerts come out, and they're showing these stunning photos of the National Guard troops descending on the U.S. Capitol to protect Congress. Interesting stuff we're seeing out in the world, right? Anyway, I'll just say I wonder what they're so afraid of. I'll let you guys make your own decisions on that stuff. But yeah, it's crazy, crazy times that we're dealing with right now. And markets are actually, in my opinion, starting to struggle up here. We're still going to see, we're just coming into this new era from the standpoint of new administration, a lot of new ideas that are going to come in the marketplace. I've been doing a fair amount of research trying to come up with a valid presentation for you folks on MMT and just how much I think these folks that are coming into the administration are willing to push this narrative and how far they're willing to take these concepts. And I'm working on some pretty interesting stuff. I've got a small book started here from the standpoint of things that I want to talk about, and I'm thinking about just doing a live stream on that because I think it's going to be really significant and what types of narratives we're going to see being pushed out and what type of things that we're going to start to begin to see manifest in the economy. Now, they're also coming up, I hate to even mention coronavirus on the channel because YouTube is, if you even mention a word, say anything contrary to anything, their algorithms are hitting everything. Really, the only thing I want to say about it is that there continues to be this evolution of ideas around the virus and the now there's new strains, new fears, new lockdowns, new everything, and it's just getting it's still growing. We're not through this thing. Meanwhile, markets don't care about that. Remember last year, not a few weeks from now, one of the things I'm going to show you some of the stats that were coming out of our database a year ago, and it's very interesting. We're almost aligned exactly like we were before. So that stuff is interesting from that stuff. Yeah, the Rona is out there. You know, it's very interesting what we're seeing here for sure. Yeah, I would agree, Garden Chick. We are turning into a Jerry Springer Twilight show. It is Twilight Zone for sure, and it's definitely going to be going to get more interesting over the next couple months. So I'm going to go over to a full screen view, start to look at the markets here. I actually don't know what it is about going live, but my nose is starting to run. I have allergies, and we're in Arizona, so tree allergies kind of go all year long, and that's what gets me is darn tree pollen. So bear with me one sec. Yeah, so okay, I'm back. Thanks for that. It's just amazing to me. I go live, everything's fine. I start running, my eyes are watering, all that kind of fun stuff. And by the way, that is not a green screen. Somebody made a comment that my bookcase is a green screen. I can actually go back and grab things on my green screen. I have my crystal ball back there now. So let's dig into some of the, I want to start off by talking about a couple things, and we'll go to the charts and break down everything that's going on out there. But I really strongly believe, and it's not going to be, my bet is not to the end of the first quarter or the beginning or the end of the second quarter, where we're going to start to see a lot of talk around MMT and really blowing up the monetary base to the next level. And it's really interesting. I watched a couple of videos that are out there, and especially if you watch some videos on MMT that professors from certain universities are putting out there, this is the magic of the world. It's going to save everything. It's going to solve inequities all over the place. It's just the magic formula. And I believe, as I've said before on the channel, I believe they're going to start to do just that, and they're willing to give this thing a shot. How far? I think pretty far. And they're going to push it until even something revolts against it or it breaks. And, you know, there's certainly not been a lot of real good, I guess, efforts on MMT, but you know, it's always everything that's done, whether it's socialism or MMT or any other type of theory, even the Keynesians, they're going to push this thing every way they can because it's what they do, especially when you have a printing press and you can make anything. And I saw one of the most interesting comments is that you can't go bankrupt when you can print your own money. I thought that was interesting. So, yeah. Anyway, so I won't tell you a story. Maybe when we get down the road a little bit and we get long in the tooth and we're all getting tired here in an hour and a half or so, maybe I'll go into some other things. But you know, it's all monopoly money in the end. And you know, if you own all the hotels, you know how that goes, and develop your properties, you end up to be the landlord. Yeah, and so. I think, folks, that you're going to see something really, really interesting. Like I'm trying not to go too far down this rabbit hole I'm kind of climbing into right now. But when I think about having massive amount of troops, I thought Joe Biden was going to be in his basement for the inaugural. I didn't think he was coming. I know Trump's not going, but I mean, this thing is just getting ridiculous, right? So now they're afraid. I don't know what they're afraid of. I'm sorry, folks, but this is going to be, the U.S. is becoming. I know we have some international folks on here, and MMT is modern monetary theory, and it's a theory based on expanding that just printing money to pay for things, and the government does fiscal spending. And I've talked a lot about this. I'll just go down this hole for a second, is that Jay Powell at the Fed, when they pumped all the money into the markets all started last March 9th. That was the mark in the sand that was made on a Sunday. They told you what they basically printed money. The funniest tweet I've seen anywhere, somebody made a comment on how does the Fed create $4 trillion, and somebody said, open up spreadsheet, add zeros, hit save, close spreadsheet. And that's exactly what is happening, is they're just producing this money on the balance sheet. There's no actual printing of dollars. And, you know, it's really, I'm telling you, this is going to be one of the most bizarre things. The Great Reset, all of these things, it's going to be driving the dialogue of all of us that are involved in the markets here for a while. So let's try to get into some technicals here and start to look at what's going on. And I'll start breaking down some stuff. My plan today is to go to U.S. equities. I'm going to start with the futures on the S&P, go down the list. We're going to go through the spreads that I've been talking a lot about. Then we're going to do Treasuries, the dollar, and then I'm going to go through gold, silver, and copper. I'm going to go through all the metals, and then lumber, and then we'll get into, after all of that, we'll get into individual stocks and things of that sort. And I know I saw GameStop blew up. I'll show you later. And yes, WaveTech owned it. So subscribe to WaveTech. They bought it at $4.50. It's I think $69. I don't know where it's at, but it's crazy stuff. But yeah, so the whole deal that we're seeing going on here is going to be significant. So let's go ahead and let's start looking at some of these charts. And one of the things that I've been talking about every night on the nightly videos is we're seeing a contraction again. It's like this formation that's up here at the very top. I still need a better tool to draw, but I'm going to use the only one I have just so we can do this. I'm going to draw a box around this. But this area right here, we're getting this contraction of volatility. And typically when we get this, we do see the market start to turn lower, and there's a lot of risk that's starting to build up here. The other thing I want to show you is the PPMs are up. This is I'm actually starting. I said I was going to start with the futures, and this is the cash. That's okay, but none of the especially PPM3 down at the bottom down here, which is the PPM stand for price, pressure, momentum. They're custom proprietary indicators that I use in our software and in my analysis every day. And I developed these back in 1984, if you can believe that. Isn't that ironic? Anyway, but these are the main primary indicators that I use for measuring trend or lack of. And so markets go through trending and non-trending. They spend only about 40% of the time in a trend mode. So we're into that non-trending mode right now. PPMs are starting to click up just a little bit, and we're starting to get some positive momentum building, but this configuration on the market grid, which is these lines that you see above and below, they're similar but way different than like Bollinger Bands. Bollinger Bands are standard deviation lines. These are based on a different measure of volatility off of daily ranges, and it's a short look back on these, but they give us some really good indications of what to expect. And it was interesting. I think 2 days or 3 days ago, I'll show you, we will talk about Bitcoin later. Got a RTX sell signal a few days ago, and now Bitcoin is swinging in monster 5% and 7% swings up and down. It's pretty wild. I'm sure they're churning up a lot of money right now, people trying to trade that thing. So let's, but this stuff on the S&P is actually starting to really show that contraction, which is a bit dangerous. Says we could retrace back into some of the moving averages. There's some pretty solid support here. There's support at the 10-day moving average, 37.70. Today we got down to 37.91, so we didn't get down to that. S1 on the cash today, these grid numbers over here, was 37.92, so we traded just a touch below S1. And I talked about yesterday and last night's video, could see an S1, R1, and a possibility of an R2. So R2, 38.18, high 38.15. Let's go over to the futures for a minute. You'll see the same pattern that's unfolding. The R2 on the high so far, R1, 38.05 was holding earlier. Now we've had a high of 38.08, and R2 on the futures is 38.16. I don't know that we're going to print that, but the same thing that I'm talking about in the cash market is we're not seeing any big acceleration, nothing that's telling us that we're going to see this thing blow out of here, and it's got that same formation. It's very similar to what we did over in November. We went sideways. We crawled along that 10-period moving average, same basic scenario. We may trade below it for a couple of days if we don't get a breakout of this pattern pretty soon. I mentioned in last night's video that there is some upward objectives around the 38.54, 38.59 level is some possibilities, which would be all-time new highs. And the cycle high that I talked about a couple of days ago, that high was 38.2450 on the futures. And if we break above that number, then that that would definitely be a breakout and give us a swing objective at least to that 38.54 number. So let's go back to the cash now. I'm going back and forth, going back to SPX, and let's flip this thing over to a weekly mode. And last week we saw this thing close all the way up, just surge. This is really the second week of the year, and a lot of folks, you start the same crud comes out every year, where you hear folks talking about the way the first week goes, then the month, or if January is higher than all that stuff, all the seasonals and stuff. And I'm not really big on. I'm not really big on trend lines. Most of you folks know that. I do use moving averages. I do like long-term moving averages. I think that the trend lines are a little too subjective. I saw somebody mention there's some trend line off of 1929 or whatever. These markets are so constructed different that we'll see. But I do see some risk, and I think there's in these markets, as we look at the weeklies are the key here. And this is, we can look all day long at the noise, and I call that the daily charts. But when we start to look at the weekly charts, now we are digging into a little bigger trend. And all of the trends on three levels here, if you look at the, bear with me 1 second, I got to get rid of something on my way here. It's doing more obstruction than it is good. So if we look at the weekly, PPM1 is still at a plus 0.83, but it's turned down. PPM2, and let me bring this up so I can make sure I point everybody's eyes to the right place. Bear with me. So PPM1 is here. It's penetrating its first derivative. PPM2, the next indicator down, has penetrated first and second, and PPM3 is turning down. And this is not necessarily how things look when we're about to make some big run and big blow off. We're going to run into new highs. The thing that is good on the far left-hand side of this chart is 0.83, 0.56, and 0.77. These are all intermediate, very bullish long-term trends. So what that tells us, and what these PPMs do, is to help us to understand the probabilities around moving averages. And this is why I like to use moving averages. I don't like trend lines because they're too subjective, that you and I draw them. And they also start to limit what you think can happen. You think these, and it causes a lot of subjectivity in your analysis, in my opinion. I just like to have something. I know I didn't draw. I spent a lot of time, literally, over 40 years. We actually, this is what, in 2 years, it'll be 40 years ago that we developed the PPMs. So this has been my entire career, so I figured out how this stuff worked, figured out how to make money on it, and I never stopped. I didn't try to make it better. I just kept doing the same thing. So I'm the not necessarily a one-trick pony. We've got quite an in-depth analysis that's been around this, but it's been around these indicators. And I like these indicators because they're not 0 to 100 meters. I hate RSI, stochastics, anything that tops out at 100 and starts to crawl along the top or the bottom. Just don't. I just always feel like those become useless at probably 30 or 40% of the time. They're just useless indicators. This is measuring pure momentum, and I'm actually not measuring daily change momentum, but measuring the momentum of the moving averages, which gives me a probability of holding. So what I'm telling you is that these PPMs right now, 0.83 says that there's only about a 20% probability that the market will decline below that value of the 10-week moving average. Right now, that's 36.64. That's almost 150 plus points below where we're trading. but that's where the major intermediate support is right now based on this. But the but is, if we start to take out first and second derivatives, then it starts to suggest that the market's going to move toward that average. So as the market comes down, that average is going to continue to come up, and there'll be a convergence of those values. And at that point in time will be where the next level decision will be made about the trend. For now, the market could move all the way back to 36.64, still be in an uptrend on an intermediate level, not break any trends, not do anything other. We have a little minor correction within it. And so right now we're still in a very robust trend, and I've talked about this a lot over the last couple of months. These trends are very, very strong and still show the type of things that we need to see going to keep this thing going. Now I'm going to go into the secular trends here, and I'm going to focus on the S&P here, and we'll go into NASDAQ here in a minute. But we start to look at the monthly trends, and monthly shows R1 on the monthly. So this market grid gives us expectations where we think things are going to go. If you look at these are basically insane numbers that we're seeing here, and I've talked about some of the longer term projections on the S&P. You know, as far as a collapse of any sort or anything like that happening, I really don't see that happening. In fact, we're printing just above R1 right now. R1 is 38.19 on the monthly. So for the month of January, we're looking at 38.19 as minimum. The next level is 38.90. And all of these things, which I will start to go into a lot of detail. Like I said, my plan is to go into detail on this whole MMT, how they're going to manipulate these markets on a longer term basis. I'll get into that in a special show, and that's all we're going to do. That's all we're going to talk about on that, is focus on that particular thing. For right now, it's not really in play yet. It really hasn't. I mean, there's no new administration. There's nothing going on. I mean, Congress is still spending all their time trying to impeach Trump yet. They're just, you know, I just wish they'd go on. They won. Let's go on. Let's do whatever you guys are going to do, and get ready for the next phase. But you know, we just all need to move on in this country. That's all I can say. So let's do that. But from a market standpoint, I talked about this before. I've got objectives for this year, minimum 42 to 4,900 S&P. That's somewhere between around a 13 to 25% gain for the year for this year. So I'm not predicting any kind of disaster. Maybe there's a black swan. Maybe there's something that happens that nobody knows about. You can't predict them. That's why they're called a black swan. But based on all the trend analysis, and look at the PPMs on this page. I mean, this is just off the map. You're looking at 3.79. I'm not sure. I can go back quite a ways on this. If there's ever been a 3.79 on this indicator before. But this is a huge number. This tells you there's actually about a 0.0% probability for the market to drop on a long-term moving average 33.65. It's not going to go below that. And that number's jumping at roughly at almost 4% per month right now. So we're seeing accelerations and trends and values of that we've never seen before. Now, let's not forget they just put Tesla in the S&P 500. Normally, the adds and subtracts of the S&P 500, you don't get such a large cap stock to come in at the top end of the index like this. So this is very unique, to say the least. And normally, they replace somewhere in the mid to the bottom end of those stocks are the ones that are rotating and they don't have any material effect. Adding in Tesla, this definitely has a material effect. Now I'm just looking at the S&P has continued to trade higher. We're 38.17 right now, so we're pushing up toward that that R2 number as we speak right now. But the patterns that we're seeing here in the PPMs on the long-term secular charts are significant. So PPM1 is 3.80, PPM2 is 1.33, and PPM3 is 1.11. And these are just, there's no way for me to give you the perspective to understand what this means from my viewpoint and what these trades are really doing here. You know, you're looking at this is significant, and I've drawn in a couple of weeks ago. I've drawn in the expectations. I could put on the Fibonacci expectations. I'm just going to give you the numbers today at 42, minimum 4,200, 4,900, and I keep throwing this number out there, and I'll come up with some better calculations that when it's appropriate and when I can make them. Is that it's possible for this is going to sound crazy. I've been saying it almost on every live stream that we could actually see a 10,000 S&P, and this would all be based on MMT, everything that they're doing, and the end result will not be everybody on the planet will be equal. The end result will be the inequality will be the highest that it's ever been in history. It won't be that way at all, and so it's going to be very interesting to watch this unfold. Our job, as I've said before, as investors, it's not about politics. It's about playing into the new cash flow that's going to be created, and I believe that's what's going to happen. There's going to be a lot of opportunity here, and so I don't see this as the end of the world. I know there's a segment of the population that feels like the world is ending. That's not what I think is happening at all. I think the world is going to change. Maybe I don't agree with it. Maybe I do, but that's the way that's going to go. We'll just have to watch and participate. Our job is to make some money, and that's the thing to do. So that's what I'll be doing. Yeah, it's kind of interesting. I see somebody said, yeah, we are going to do silver today, Christopher. I'm going to be doing gold, silver, and copper here. So I just want to get through this equity stuff right now because I think this is where a big focus is. This is where most of the cash flow is going. Yeah, so we're going to go through Russell expectations and all that as well. Yeah, so I'm just looking at some of the comments here. Yeah, listen, this thing is going to be so dynamic. I think making any, I'm talking about expectations off of Fibonacci numbers I have. Since I put that out there, I'm going to put this up here real quick. 1 second. Bear with me 1 second here. It's kind of interesting because I wanted to bring up the monthly expectations here. And right now on the S&P, the higher end of this thing we're getting really close to the high target 3 on this pattern that's out there, 38, 85, 81. So that's going to be a number. I'm glad, like I've told you folks before, I do a lot of research while I'm doing these live streams. So it's kind of a live research for me. I don't figure out what I'm going to say. I just bring up the charts and I talk about them. But 35, 85, 81, that's going to be a number to watch. We've already penetrated through the the previous high target was 36.38. We obviously went through that, and so 38.85 is going to be the big pivot number above the markets. And the way they're acting, they certainly want to go there right now. We're seeing, let's see here, I'm just looking at a couple things. Yeah, so we're trading at some pretty key resistance numbers intraday right now. Yeah, I will definitely going through oil and energy. I'm going to try to get through everything. So let's go over and go back to let's get through NASDAQ. We'll talk about the Russell. So this is some interesting numbers on the daily NASDAQ right now. There's some objectives above the markets pushing 13,000. This is for the futures. 13,949, 14,611, 15,020. And we're seeing the PPMs trying to turn back up. And I've been talking about this. I've been talking about this pattern that sets up, and we continue to see the NASDAQ be, on a relative basis, it's getting the type of projections that are higher. And I'm going to go and tie the Russell in, and we'll go through the spreads, because those spreads have been monster good. And I've seen some stuff on my Twitter handle, Twitter comments and stuff, that people have been commenting about the long the Russell, short the NASDAQ, or just doing a ratio trade against it is the other thing you can do. And a lot of folks I know that I've talked to and communicated through different venues have just bought the Russell, which has been a good thing too. But I like the spread trades, but let's go to the weekly here and just see what starts to come up, because sometimes you'll get these kind of values. But look at these values up at the top here. If you can see these dots, let me draw them in just so you can make sure that we have all our eyeballs on this thing at the same place. So right here, there's three of them. Those numbers are 16,506, 18,741, 20,121. Now, a lot of times we'll see these type of projections, and they never come to play, but they appear to come in later. I'm just going to show you over on the left here, back on 2019, the projection was for a high target of 10,000. And that didn't come in, let's see here. That didn't, let me see when that came in. That didn't come in until July of last year. But the point is that some of these projections like this, these are longer term projections that become valid as long as there's not certain, as long as the trends aren't penetrated or changed. And right now we got, this is the same as in the S&P. We have a conflict building in the weekly trends. The short-term trends right now still look like they're trying to grow, but the weekly trends, PPM 1 is rolling over, PPM 2 has rolled over. That's over here on the right here, and then PPM 3 is working on it. So we're seeing momentum on a weekly basis start to bleed off. It doesn't mean that because this is happening, we can't print a new all-time high. It doesn't mean any of those things, other than the trends are starting to fade a bit, which usually tells us we'll trade back into the moving averages at some stage. And it doesn't look like that's right now. So if we go over to the monthly on this, on the NASDAQ, you see we've actually exceeded. If I go back, if you see these dots, same dots I have here, let me put a cursor up here. If you look at that, the high target on this, high target 3 was 11,891, and we took that out a while ago, back in August. But that was generated, this pattern came from April 30th, 2019. These were the objectives, and they were never invalidated, even during the collapse in the COVID deal. None of that happened. It continued to be valid, and then once we've exceeded this number, it stops calculating them. But we've seen this, that this was what, nearly a better part of 2 years ahead of this action. So we don't have any new patterns being projected here. So we'll have to wait and see. But once again, look at these numbers. They're bigger than what's on the S&P. On the secular trends, 4.89 is PPM1, 2.64 and 2.08. They're almost on PPM2 and 3 on the NASDAQ. They're almost double the momentum levels that we're seeing on the S&P. So, this is a huge trend that is a long ways from being done. That's all I'm going to tell you. This is not the type of configuration that we roll over in. There's a lot of work to do, and we're looking at, I'm going to call another 6, 8, 12 months of this trend that's going to be in place, and we're looking here, now the NASDAQ is up 0.75%, up 97 handles right now in the futures. So, this is, we're starting to see some acceleration. Where's the S&P? S&P is trading S2 right now at 38.63. So we're definitely seeing a push out there. I don't know if there's anything going on. I guess the sign of National Guard troops is bullish. Maybe that's it, right? So we'll see. The only other thing, tomorrow we do have the claims numbers and those coming up. That's pretty much the end of the week coming. I think PPI comes out. So inflation's starting to show and kick up a little bit. There's some things going on out there that are interesting. So let's get into the Russell, and then we'll do the spreads, and then we'll move on from the equities here. Now, this is the monthly Russell, 6.39 on the PPM1, PPM2, 1.65, and 1.02 on the PPM2 and 3. So these are also very strong trends. We're just about up to the high end of the range. If we look at the expectations, we're printing, let me get this number right here. We're printing at the 2123 level. R3 is 2149, so we're almost printing R3. The RXT, which is the extreme for the month, is 2203. But once again, this is monthly, so we're going to go top down. So we'll go to the weekly next, and you'll see that the next objective is 2313 on the Russell on an intermediate basis. So we're at least going to hit up there. The extreme projection right now is for 2463 on the Russell at the moment. So let's flip over to these trades and to these spreads and take a look at how they're looking right now. And let me get off screen here fully. So as we start to look at this upper box up here, this was the trade that I've been talking about, IWM versus PSQ. I'm going to flop to another screen just for a second here. You're going to see right now that the Russell is actually giving back a little bit, 0.20 with the composite up 0.7 at the moment. So that's interesting. But the spread itself, we're still looking at this spread overall working really well. Here's a slight downtick. I'll make this full screen here. There's a slight downtick on the Russell versus the NASDAQ. But as we expand this out, you start to see the magnitude of the spread. And those of you who watched the channel before know that I'm a big spread trader. I love trading spreads. And what we're looking at going back to this spread, at least back to where it was in 2019. But this is a long-term trend where the NASDAQ's been outperforming since going back to December of 16. This is not a new trend that we've been watching happening. And so what we're seeing down here now is that consolidation, the breakout, and then we usually will go back to a previous consolidation range on a spread, which will be a lot of resistance up here, but it's got quite a long way to go yet. And so I continue to expect to see that pattern move toward these upper levels here. And the same thing is happening on the mid caps. They're not as strong. All the focus is on the small caps, and that's where a lot of momentum has come in. But we're going to see the same thing here, where we're going to move up to this previous consolidation level. So mid caps, small caps, those two asset classes are going to be the places you're going to want to be involved in. And so if you're looking at going through and picking stocks to trade, you probably want to look for stocks that haven't moved yet in these asset classes, which would be the mid cap and small cap stocks. Now, I put this up here before, but notice that the S&P versus NASDAQ, it's still pretty much at the lows. There's no uptrend here, and that's primarily because there's a lot of the NASDAQ stocks at the top end of the index itself, so it's not going to get everything. Yeah, so 2463. This is something Scott Sanders was asking. You know, what is if the Russell going to go to 2463? That's the timing of that is, you know, you can't put a time on it. You just have to watch the trends and know that unless the trend's been broken, that you're going to continue to move toward that. That was those of you that have followed me have heard me say before that my nickname on the trading floor was Dr. Given, and that's how these guys used to always nail me. They'd always say, "Okay, smartass, when is it going to make it there?" And I go, "I don't know. It's just going to make it there." And they'd get me down to a time, and I'd say, "Okay, it's going here then." And of course, it did it 3 months later, or did it 6 months later. So it's very difficult to take those time projections and put them out. Other than you have to follow the trends and make sure they're continuing to happen. And the way you're going to be able to do that, Scott, is to follow these intermediate and longer term trends, and then watch these spreads to make sure the spread's not failing. So when you start to look at, if I go and put the Russell back up, if you start to go to the Russell here and you see this spread start to fail, then that would be one thing. Now this is the weekly chart. I'm going to show you one more thing on this Russell while I'm back on this. This is what the monthly graph looks like. So you can go all the way back to 2009 to find where the right shoulder of this thing was. This was all the way back in actually of September. This is when Lehman failed. This outperformance by the NASDAQ has been going on since then. So you could go, you're looking at a 12-year trend. So it's going to take a while, and it's going to move back into this previous consolidation, and there's a lot to go. You can see, looking at a monthly graph, this thing is just beginning. There will be some corrective phase. Maybe that's why we're seeing some of the extra strength on the intermediate and longer term charts on the NASDAQ, that they'll take back some dominance and then there'll be another surge. So you just want to be careful. And this is, one of the things that when we talk about using our software, that's what our software does, is we're looking at these trends. If you have individual stocks, that we're going to step back from those stocks when their short-term or intermediate trends start to step back. We're going to move back out of there and then come back in at a later date. So those are kind of things you're going to have to watch for as you're going through that. So, okay, what else I got on the boards here? Okay, I got through the spreads. So let's go through. The next thing I want to go through here is we're going to go back through Treasuries. And I mentioned in last night's video, actually, that I thought let me go to the daily, that the daily Treasuries look like they climaxed out yesterday. We printed up to 1.18. I thought we would come back toward the 0.9 level. That's exactly where we went. We did trade down to 1.07, and we traded through the STX number on the 10-year. We exceeded all the upward projections that came out back from December, and now we're seeing this thing. It's going to consolidate. I do believe we'll stay above 1% level, and we'll see some consolidation up here. PPMs are very strong, so the underlying trends are strong, but you can see somewhere around 1.03, something around that level on the 10-year will be strong support. Should see a consolidation here on a short-term basis, but when we go over and look at the weekly, you start to see that this trend is very much evolving, and we're seeing very strong 2.98 on PPM1, 2.63 and 1.22. So all of the intermediate trends are up now. So these are yield charts, not prices. If we're looking at prices, you're looking at a massive collapse in prices right now in the treasuries. So what we're seeing here is a lot of carnage in here. If we look at, it's interesting that we're seeing the dollar uptick as these things are going, but it has a lot to do with some interest rates. I saw some conversations going on with some folks over on LinkedIn this morning, a couple economists type, and they were talking about, the Fed's not going to let the rates go much higher than this. The technical said that, but what we're really going to see here, and I'm going to go to the yield curve in a minute, the yield curve is going to be dominant as we go through all of the configurations of when we start to see MMT, when we start to see fiscal spending, when we start to see all these things. It's going to all show up in the yield curve spreads, and this is also why probably the other sector that if you're looking for stocks is definitely be looking at some of the financial sector. The financial sector is still the largest number of stocks of any sector out there. So continue to look for ideas there. There's a lot of mid-cap and small-cap, small regional banks. There might be some plays in there. So if you're looking through stocks or if you're using our screening service that we have, then you can also find some things like that in those levels from that standpoint. But the treasuries are going to stay up. And now this is where the long-term charts are going to tell us a lot about what's going on from the standpoint here. We moved up, and I talked about this, I don't know, over the last, for the most part, I cover this stuff when I do my live streams on Wednesday, and I talked about moving up to the 21-period moving average. Well, that's exactly what we did. And in fact, the 21 was the 122 level. I know I mentioned that in a video or a live stream or something at some stage, and that number, we've reached that number, which is going to be very strong resistance. And it's interesting as we look at the PPMs, and I'm going to draw in a couple things here, and then we're going to go to the yield curve, and then we'll move on to the dollar and keep going down the trail here. But as we look at this line right here, this is being tracked by this PPM. Now that PPM is down 5.25, but if you look at PPM1, it's up at 5.48. So what this tells me is that we're going to be sandwiched between these two moving averages on a monthly basis. And those moving averages right now, from that standpoint, are, let me get rid of this so I can bring up the actual values here. The moving averages we're at 0.75 on the 10-month moving average. So that's all the way back down to 3/4. I don't think we get much under 0.95. On the upside, 1.22 I just discussed. So we're going to be sandwiched about that 22 basis points in a range, maybe as much as 30. So we'll see some volatility over the next couple months as this thing starts to come into play. But this will be where the interest rates are going to be constrained on the 10-year. We could do the same analysis if we went over to a 5-year. It looks way different. And the reason why it looks way different is the Fed is focused on the 10 and 30-year. And I'm going to show you the spreads on as far as the yield curve goes. That's where you're seeing this action as far as that stuff goes. Excuse me. So yeah, so let's go over to the yield curve here. And this first chart I'm showing you here is the 530s. And this is a key chart that banks use, and you can see going back, I'm going to put a cursor on the page here. This is the March 9th. Let me draw this in. I want to make sure you folks see this. So right here at this low, this is when the Fed came in on March 9th and told us all what they were going to do. They were going to support every market, everything that happened. So what we saw from there is the spike in the yield curve over the next 2 months. And then we saw some retracement, and now we see this steady trend. And I've been telling you folks for 4 or 6 months that this is being engineered by the Fed, and they're going to continue to engineer it. Now, this is the 5 versus the 30-year Treasury, okay? This is a primary focus. What this does, this spread that I'm drawing in, that spread from those levels changes how banks can make money. And I've made these comments before, is that I just want to come on here full camera and talk about this for a minute. I've said this before, banks don't take risks, they make margins. So what the Fed's doing is allowing the financial institutions to make margins. So the 5 versus the 30 is a sweet spot. And so they've increased this a lot. I can take this spread out, I think, pretty far. I'll do that when I come back on screen with that. But banks don't take risk. Banks are not risk takers. They make spreads. They charge fees. They're basically leeches that on anything and everything they can get their hands on. I spent almost probably the better part of 15 years working with bank institutions and lending institutions, such as mortgage bankers, those types, and helping them manage their portfolios. And I'm telling you, they don't take risks. They make spreads. They're going to make the spreads. Anything they own on the books, there's something else against it on the other side. So that's will be how it always is. So this spread tells you, let me go back on here. This spread shows you exactly that premium or that spread is being given to the institutions to make money. And that's why you see as rates go higher, these spreads continue. This 530 spread expands. And if you watch this spread, this will tell you everything about the health of the financial sector as you go forward. Yeah, so somebody's asking if I have any mid-cap financial stock select. I don't have right now. One of the things that we do on our WaveTech training, I know this last week was a private training just on Zoom only, but we talk a lot about our stock screens and those type of things that we offer out there to be able to select those stocks. So there's just a lot of them. We run some big quant information, both qualitative and quantitative type screens to come up with some stock ideas, and there's a lot of research to be done to actually come up with those lists. I wish we had the staff and the ability to do those things. That would be pretty significant. So let's see what I got up here next. So Treasury yields. We're going on to the Dow. I want to get through all this primary stuff here today. All right, so I have, let's go back to the daily Dow. About a week ago or so, I thought we were seeing a bottom. Sometimes when we get these downward projections that you're seeing on the screen that I'm marking out right now with the cursor, those things won't be met. We saw PPM starting to turn up. I know I covered the Dow. It's kind of sporadic where, you know, there's so many markets I would like to cover every day, but it's impossible to do these things at this level. But the bottom line is that these PPMs have turned up. There's definitely a bottom forming. We've traded into the moving averages, which has set things up pretty good. And we're going to see this pattern continue to unfold. The next level that we need to look at here is the weekly, and we're seeing the weekly PPMs actually starting to turn as well. And I'll show you where I think the extreme number is on the Dow, and I know I discussed this probably in last week's live stream, but we'll just see here. Let's go over to the monthly. There's a 200-month moving average, which I kind of blocked out as a key level here. Bear with me, just trying to bring this up on the other screen. I'll bring it over so you can see it. But if we look at the levels here, 89.29, 89.37 was S1 on the Dow. On the R1 is 90.47, R2 91.07. So we've traded on a monthly basis. So this is for the month of July. We've traded above the R1 number. We're probably heading at least to the 91 level. The key number down below is 86.90. The lowest that we've gotten in this pattern is this 89.29 level. Chances are the Dow is trying to print in a low here. And the reason why we're seeing the Dow starting to do a little better has everything to do with some of the movement in the 10-year. So we're starting to see some interest rate differential really start to show with this little boost that we've seen in the 10 and the 30, and it actually across the whole spectrum, but it's been more, as I pointed out a minute ago, it's been more concentrated in that 10 and 30 year. That's where the yields have played out the most. And just to kind of backtrack just a little bit, it has everything to do with the financials being able to make money as far as that goes. So that's your Dow. Now we're going to dig into gold and silver. Let me just gold's trying to do better, but it's still struggling right at these levels that I've been talking about in videos, in the daily videos last couple days. 1862 is a big number. We got up to 63 and we traded back below there. We're trading 54. We're seeing the PPMs just falter here, and I think it's setting up for some potential risk to move back down toward the lows that we saw on this little reversal day, which was at the 1817 level. So there's still a fair amount of risk in gold here. It's stabilized, but there's no new trends starting to form yet. Nothing like that's happening. Let's go over to the weekly so we can get that viewpoint. On a weekly level, we're seeing PPM1 down at a 0.55, PPM2 0.25, and so we have basically primary downtrends formed here, and that's going to keep some downward pressure, and we could trade down toward that lower end of this Fibonacci range that I've talked about for probably the last month and a half or so, but that low was down at 1767. I don't think we're going to hit we may retest that low, but if we look at the market grid, 1762 for this week is the extreme. Most likely what we're going to see is S1 is already printed this week, which was 18.1. It's on the screen there. And then on the upside, R1 1852, we printed up to 64. So R2 on a weekly. This is where we're going to see more of this secular trend start to show up. We got that big reversal last month, and now we're seeing this thing follow through early in the month. We traded as high as the 62 level, and now here we are back at 53. But I think let me correct that. Yeah, the high was 62, and so that also went into, I don't have any way of zooming in on these numbers here, which really is frustrating. I would like to be able to zoom in so I could show this. But this is, let me just try something here real quick. Yeah, this will help a little bit. Right until I did that. But this 18, yeah, I jacked up this calculation. Hang on one second here. Yeah, so 1862 is around the 0.38, 0.5, 0.618 range is going to be a dominant range in this pattern. So we're not going to see this thing really do much more than what we're seeing right now. So a number of more months of consolidation in gold before it's ready to do anything significant. I see this thing setting up a bottoming pattern, but there's still a lot of work to be done here, and there's not time to position for any intermediate or longer term trades just yet. I made the comment when Bitcoin was trading up to 40, 42, 43,000. That was something that might, maybe people were selling gold, buying Bitcoin. Well, that's we'll go through Bitcoin here in a few minutes, but that's I think that whole pattern has changed quite a bit from that standpoint. We kind of spiked out, got a little too excited. But looking at the monthly, just one more comment before I move out of gold here, is that monthly PPMs are still robust, but they're starting to lose their momentum, and that's why I'm saying there's a number of months before we're going to see this thing ready to move out of here. So let's go to silver. We haven't covered silver for a while, I don't think. So we go to silver. It's got very similar configuration from that standpoint. This is the daily silver. We're trading just below the 21 and 10-day moving averages. That's going to be your resistance points, 26.31's the 10, 25.98. So it's quite a bit above this market. And then it looks like we're sandwiched between 25, we'll just call it $25, and 26.30. That's going to be your range for a little while. Now, PPMs are attempting to flatten out here. You've got a very mixed picture, so PPM 1's going to have to stabilize. If we can go sideways for a couple more days, then there's some possibilities there. So we go to the weekly chart on silver, we're going to see we're trading above the 21 week, which is a positive 25.98. We're last trade at 25.52, so that's somewhat of a positive, but we're looking at also printing right at the R2 for the week, which was 82, 25.82. And so, but the PPMs are just all negative. There's not a lot here. The big number underlying this market is 22.65. Anything down close to that number would be a bargain price. I don't see that happening at the moment, but that is definitely, this pattern is set up similar to gold, but differently. Same thing here. This is what I call the dragon head formation on the market grid. And this has just got a lot of work to do, just like with gold, before there's any kind of pattern set up, before you're going to see any big move up. So all the excitement that we saw last June and July, August, that was the end of that was more or less the end of the party from that standpoint. So now we're consolidating that. There's a lot, like I said, at least 4-6 months. I cover gold on a regular basis on the channel, so that'll be easy to stay up with. It has, it is definitely locked in a range. So make sure you watch the daily videos to pick up on what's going to be the key numbers to trade off of. And I try to set those up every night. All right. And this is a market I'm going, a lot of folks have been talking about copper. It used to be, back in the old days, that copper was a big part of home building and things like that. Most water pipes that are used in houses now are PEX. They don't really use that material in that particular part of manufacturing, but there has been some demand increase, and a lot of folks are taking typical old school metrics and applying them to the markets from that standpoint. But as we really have to go into the weekly charts to see anything, you're going to see we basically got an RTX sell last week, and we're seeing some sideways movement. I suspect that's going to be the case. We also almost got up to one of the targets on copper, and I did look at this a bit before I started the live stream today, and I think that probably the most interesting thing I was able to find was really going back and looking. This chart here is, let me go full screen, get off the screen here. This chart here kind of gives a little more perspective. This goes back the last 20 years of copper, and there's been a lot of a number of highs up at this $5 level. So we're printing back into 380, but the momentum here is very strong. So regardless of what happens here, we're going to see a consolidation, probably staying above this 200 month moving average, which is at, one second here, $3.24. So that's going to be your support line. So we probably get a consolidation here. There may be higher prices than here, but there's definitely been a lot of demand for copper coming in. And I'm going to tie this market together with going through lumber, because I think that's also been a key play as well. And lumber's been absolutely wild. We did get a monthly RXT sell last month, and what that means is that typically we'll get a couple months of sideways movement here, but lumber prices went from have went up substantially, like 500-600%. So the cost of building has went up, and that's been one of the big elements in the markets from the standpoint of the housing boom that's going on in spite of everything. Looks like we're getting some selling coming back into the markets right now. We'll go back over there in just a minute. But yeah, so lumber definitely shows a lot of demand, copper showing demand. And so this is part of that recovery trade that I've been talking about, or the new rotation. This is everything that's going on in America. Yeah, so I'm just looking at a couple questions here on the channel. Somebody's asking about the industrial use of silver. That's been the argument for silver for as long as I can tell. Industrial use versus gold, but gold's used in a lot of electronics anymore, so there's still a use there, but I don't really see that being a major factor at the moment. Yeah, just give me a minute. Just looking through a couple comments. I haven't looked at any of this stuff for a little while, so I see what you guys are talking about. Okay. Yeah, so we traded, we're back at '09. We did print up to 13 on the futures here. So that's we're trying to put in a little bottom here, just taking a quick glance at update the markets and activity here. So that's definitely going on there. If we go back and take a look at I've got a 5-minute graph on the SPX here going. So we're seeing it trade down into the moving averages here. And this is kind of interesting study, folks. One of the things, I'm going to show you something here. This is exactly what we're seeing on the dailies on this formation on the market grid is what we're seeing here as far as you get this consolidation or you get this narrowing of the market grid, and then you see some downside and you test the moving averages. So this is just a 5-minute graph, but this is exactly how these things set up. If I go over here and I convert it back over to a daily, you'll see this is the same thing we're seeing here, where we trade within the grid, and then ultimately we see it start to slide off and go from there. Let me get a couple of things off of this page. It'll be a little easier to see. Yeah, so you can see this little consolidation. It flattens out. Typically, we'll move down toward the lower end of these moving averages, which would put us back at the 3770 is the 10-day moving average. Below that, 3734, then 3689, and all these numbers are moving up daily. So depending if that took a week to go, then these numbers are going to be much higher. Most likely you'll see the 3770, maybe 3700 number would be where these numbers will lie as we go forward. Okay, just looking at some comments. What time are we getting to be? Almost 1 o'clock local time here, Mountain Time. So let's do a quick review of Bitcoin, because that's certainly on a lot of folks' mind. This is the daily Bitcoin. It's interesting in that the 10 period moving average, which is the red line that's here on this page, that has been the dominant demand line. We've traded above it, below it, and back above it. The PPMs are at 1.94. That thing is going to act as a magnet going through this level. We also got a dragon head, and this is a daily number. Let me look. I think it was a weekly. Yeah, it's kind of interesting. We did get a weekly RXT sell. We spiked up, and now this thing is set. We saw the same formation a while back, and one of the spikes that we saw in Tesla, where we got this type of move, and then we set up this really broad, what I call them dragon heads, where you get this consolidation range will actually start to contract as these ranges start to contract. So you can see we had the big range last week, so what we should see is the volatility calculation is going to stay high for at least 2 more weeks, and then we'll start to see a contraction. And at that time, we'll be able to make a decent call on whether this 41,971, depending on what service you use. You folks know that these numbers are different in different platforms. But this is 41,971 was the high print on this weekly level. Let me just see something here real quick. Yeah, so 41,000. So this is that dragon head. We're going to stay within the constraints of this market grid. Let me put it up there so that you folks can see what that is. That for today is, I'm going to put the weekly up here as well. So if you want to mark these numbers down, you can. But here's the range here for today. The high-low, low 32,820. We haven't quite hit an S1 on the upside. 3671, we've went just above R2. These numbers are, we'll call them close. They're not as accurate as we see in the S&P and some of the other indexes from that standpoint. But the range. So let's go to the weekly range here, just so you can get a better expectation. So we traded just below. The low is 33.14. We traded just below S2, 37.39. R1, 37.704. So we haven't quite made it there. I would expect we could see it trade up to that level, but this market's going to be pretty tough to do any trading in with this type of volatility when you're seeing, $3,000 ranges in a day. Otherwise, just even breaking it down to percent, we're almost 9% up on today. So these are going to be really, really tough to trade this kind of volatility for sure. I'd be really careful trying to get involved. All right, I'll tell you what we're going to do. We got about an hour to go. I got through a lot of information. Let's go through and you folks give me some individual stocks that you want to cover. And so I'll make a list. We'll take a couple-minute break, and then we'll come back and we'll cover all this stuff. Make sure you give me symbols, folks, not names. I'm not Kramer. Thank God. Don't send Tesla and Apple. I'll do those. All right, I got quite a few, so hold up for a minute. Thanks for the PFE. I knew that one. Actually, I said I didn't, but I did. Yeah, they're selling the S&P off decent. We got about 7 handles off the highs, so we're starting to see some selling come in. All right, folks, I'll be back in just a minute. Hang with me. Watch the futures trade for a few minutes. Okay, folks, let's start to kick in. We got about an hour to go, and we'll cover some stocks, flash back and forth toward the markets, and see what we can come up with here. So we'll start off with the typical TSLA, Tesla, and this was interesting. Is that last week we did get what I refer to as an RTX sell signal, and we are down from that closing price. We closed at 880. We're at 855. We should get at least one more week of sideways in this pattern. Doesn't mean we can't trade above the 884 high. We are seeing it recover 860 to 832 so far this week. We go to the daily real quick. We did see an RXT sell on the 8th, and we got basically our 2 days, maybe working on 3 days sideways. The next session after that sell was a gap lower, and then we got the opposite. And I'll explain these trades here in a minute, folks. The STX was we got a buy signal the next day, so we went from an RTX sell to an STX buy. And let me explain this. So this market grid that you see, these orange lines, are the projection for the extreme for the day. When we close above them, typically it will signal a 1 to 2 day move going back toward the bottom end of the grid for the next couple days. Well, we went below STX the next day, which the same thing applies when we go below that thing, is that we get an STX buy signal, meaning we went through the extreme, and then we go up the next day, and we almost got an RTX sell signal next day. So extreme volatility is what the answer is here on the daily Tesla. But we're possibly, this is somewhat interesting now that Tesla is part of the S&P, right? As we get the RTX sell, so it looks like we got a couple weeks of sideways movement, maybe the high of 880, and on the downside, we're looking at the grid 807, 874 is the extreme for right now for this week. These numbers get updated, and we do provide this service so you can see these numbers on our daily and weekly service that we have on portfolioexpert.com. But you can definitely see this stuff. These are great numbers to trade off of, but this is what's going on as far as that goes. But you can see PPMs are rolling over. It's almost exactly what we're seeing on the PPMs on the SPX and on NASDAQ, all of them on a weekly level. We're seeing these trends stalling here. They're still up, but the momentum is starting to stall, which has got to be the phase one before a top starts to form. It doesn't mean the fact that these are turning down that the market's going to turn down immediately. What it does mean is that we're going to start to see some high-level consolidation. Sometimes it'll bleed off some of the extreme momentum, reset itself, and then we'll see the daily charts kick back in. So let's, something, if you guys know some good, let me just put something out there. A couple things. If you know some good ETF, financial ETFs like banks, regional banks, those kind of things, give me a couple of those things. I'll let you guys do some research for me, and I'll cover some of that as well. Now, I've got quite a few stocks to set up. So let's go ahead and let's do Apple, and then we're done with all that stuff. Apple I've got set up here on a weekly. It's basically double topped here so far. We'll see how this plays out. But from the same thing. Apple. Let me dial this in just a little bit so we have a little better view here. So Apple got this big reversal. We finally went up. Let's see, what was that price? The high was 137.98. We printed 2 weeks ago 138.79. So we made a new high. This is classic, folks. A lot of folks make a lot of mistakes in trading by buying. Oh, it made made a new high, and they try to buy that new high. I call it the Jim Cramer trade: buy high, sell higher. Those trades normally don't work, so you usually want to fade that. That's exactly what happened here. We printed a new high by $1, and they faded it back toward the 10-period moving average. And the same patterns that we're seeing here are setting up across the board. And those patterns are that we're seeing the PPMs all fade as these intermediate trends are starting to back off a little bit, maybe to the point where they can refresh and set up a next level. But my concern with this stock is that it's getting pretty much overdone. And if Apple's not going to continue higher, at the moment we're going to have trouble pushing all these other indexes up as well. Let's just take a quick look at the daily Apple, and then so we've got a mixed picture. So you're looking at PPM 1 is trying to turn up. So short term, we're trying to turn up, just like we were looking at the indices earlier, that the short-term elements, the short-term trends are attempting to turn higher at the moment. Sorry about that. Thought I'd turn the sound off. I am really struggling with my nose right now. That was kind of gross. I thought I'd turn that off. Anyway, all right, so let's go and take a look let's go through some of these stocks. Here's Cliffs, which is Cleveland Cliffs. I believe this is a mining stock. This thing is also in that high level consolidation. The key support levels are going to be at that 1668 levels, moving up about 40 cents per week, and that will continue to be locked in this range. Let me put the grid over here for this on a daily. This is going to be the grid that I've got on the screen. You might want to write those numbers down. But the higher end of this thing, 1882, 1910 is going to be resistance. We're trading right at support at the moment. So, but this thing is locked in a trading range. The trends are on a short-term basis are pretty much down, or sideways, not down. If we look at the weekly, you can see we got an RXT sell last week, so we got at least 2 weeks of sideways, choppy range here, and most likely these are the kind of stocks that we've seen set up, that these things are played out. If there's options, you might be able to do some covered rights or do some straddles around these things to lock them in, and that's something you definitely want to look at from that standpoint. So I'm going to look at something here very quickly. It looks like we're still getting some selling coming into the S&P here. We pushed down to 05 after printing 13, so not a lot, some moderate selling. So back to the stocks here. Let's go to, I just wrote these down in order they're coming across. Here's LEN, which is Lennar Corp. We're looking at kind of a mixed picture, kind of locked into what I call a multiple dragon head formation on a weekly. Not a lot in this stock. We traded above the extreme for the week. I would expect, however, if we can remain above the 10-week moving average, 76.33, close right where we are now on Friday, that you'll see the grid turn back up. So you'll probably see this thing printing back toward the 81, 82 level on the upside. There's not a lot there to really look at. UAL, the airlines continued to consolidate. I just saw a story out a little while ago that the CDC is issuing some kind of warning about some sort of warning about the travel and new strains of the virus. So there's some negative news out there, but in spite of that, we're still looking at UAL being up. And I am going to go over to the WaveTech platform. I just want to bring up the Buffett portfolio. I built this live for you folks way back in May when Buffett was selling all the stocks. We put 9 stocks in there. We own 8 of the 9 right now, and we're looking at last year did 102% returns, and we're down 17 cents this year so far. So not a lot to go, but it did draw down from the peak, the value, about 8.5%. But as we look at some of these open positions here, I think one of the positions I think is probably at peak, and we'll look at Boeing as well as I'm doing this stock. So I'm going to do BA as well. And Boeing's trying to come back a little bit. It kind of spiked out, but the longer-term trends, intermediate trends are still up, so it's still hanging on to that. But these are the current open positions on that. As we go back to the charts here, you're seeing this thing hover just above the 10-period moving average. We've got all the PPMs very positive. I still have an expectation that we're going to see this 200-week moving average at 68 bucks on this stock. It's just a matter of time. I think this is setting up probably another leg up. We've seen this thing really stall somewhere around these levels here, this $48 level. That's been the higher end, $48, $50, right in that range. I think that what's setting up here right now will be the next leg up on the other side. Yeah, so I'm not sure you guys are hearing that very well. The sound should be much better now, right? Okay, so let's go on. Let's do BA, what we're talking about. Let's do Boeing. Boeing's got a similar situation as I was just discussing. That peak value was at the 234 level. We did manage to get up to 244. We backed off of that. I think this pattern, I'm going to draw this in. It's the same thing for most of these airlines. Okay, good. I didn't know for sure what was going on. All right. Let me draw in a couple things here, and this is going to be, for most of the airlines, is going to be the configuration that we're going to be watching it unfold. But this was the original May trade right here. This was a great trade. And then we got this here. So here's the next trade level here, and we've got this move up. So I think what we're going to see is this hold this 21 period moving average right in this level we're at right now, and ultimately move up to the 200-week moving average. This is going to happen on most of these airlines. So airlines and related industry stuff. This should be the way things unfold, and we'll see how that plays out. But this looks to me to be the most likely pattern that we're going to see on the airlines and related stocks in this industry. Yeah, I think we got, I'm just kind of keeping an eye on here. Yeah, not really. We got a little bit of a bounce on the futures, but not much. Yes, I see somebody said that President-elect Joe Biden is expected to unveil his long-awaited stimulus plan. Yeah, that should be exciting, huh? So yeah, let's. Yeah, so here's Cone Robbins. Let me go to a daily here. So Matt, what do these folks do? Okay, there's back. Okay. Yeah, Christoph, good to hear from you again. I haven't noticed you around. Maybe you've been here, I just haven't seen it. But yeah, as far as markets selling off when a new president comes in, I'm not sure anything's normal anymore, what the normal reaction is. But, you know, that is, yeah. That's going to be a hard one to make a call. I never like using any kind of seasonals or things that when this happens, that happens stuff. Charts will tell you what's likely to happen here. So we'll go from there. Yeah, Tesla heavy call activity. Thanks for that. Sell in May and go away. And I'm just looking at some of the timeline. All right, let's go through. I've got quite a few. Let's go through my let's go through one of my favorite gals, and I keep telling you folks I've got a project that just won't end. I'm bringing up our Portfolio Expert software. This is our software here, and what I want to do is we're going to bring up the ARC. We're going to bring up ARC-G, but I'm going to I'll probably show you a couple things. Here we go. I'll show you a couple things here on the graph here. Last buy signal we had on this thing was back on 417 after the that collapse on a weekly basis. And there's a couple of things that I've done recently, and I'll just get a little bigger on the screen. But what I've done recently is I've been dissecting all the stuff from ARK Investments and Kathy Woods, and I have a two-part. It's almost done. I'm hoping that in the next 2 days I'm going to have this thing done. But I went through, and I'm going to show you a couple of things that we did with the ARK investment stuff. The good and bad news for ARK, they put all their stuff out publicly. That's fine. My goal is to show you folks how to eliminate all their internal fees. They charge 0.75 internal fees on their ETF. So I'm going to show you folks how to build it without it. There's a platform fee for us, but it's going to be very easy to beat that 0.75, maybe get it down to 0.10 easily, almost non-existent. And it's really about our platform fee that's going to keep that up. But yeah, so you can see this was the last time we did this, and this is the primary issue that that we're going to see. Let me just see if I can. Yeah, so I can show this to you. So the green line is the. Let me get off screen. Can't see it. The green line on this page is the ARKG ETF. The blue line is what our software did with the same symbols that Kathy's trading. So from going back to March, she's generated 425% returns. We've generated 950% returns by trading the same stocks, doing something different. I've looked at and watched some of her daily trades, and they're just shuffling things around to make it look like they're active traders. They're not really doing as much as they think. They picked some good stocks. And if you go back to the early days of ARK all the way into 2019, these things were crud ETFs and weren't making any money. They just so got famous by COVID, made them famous, and that a lot of these stocks and new technologies they played into. So from that standpoint, that's all good. But you can see on a relative basis, if you go all the way back, even when Kathy, we sold off a little bit, but we did a much better job managing the stocks that she picked than she did. And there's another issue with this, with their funds, is that they can only go to 65% cash. I can go to 100% cash. So when the market rolls over eventually, when these stocks that she owns starts to roll over, these ETFs are going to have huge volatility. And what's going to happen, we're going to flatten it out. We're actually going to sell out of a lot of the stocks because we're running them in a different format. But I'll show you that right now. But that's ARKG. I've actually built something that I think is even more unique, is that I have built a Kathy Woods composite. So I took all of her 14 technologies, 5 different industries, and I made a composite strategy of everything. And the thing goes off the map good, okay? But if you do all of the ETFs together, they don't do as good as when you do the individual stocks and have the ability to do them. So if you want, I will have this video out, so make sure you subscribe to the channel and make sure that you get ready for this video, because I'm going to show you how to do this. And we do give a 2-week trial of the software, and it's pretty exciting when you start to see the numbers. And the good news is we're going to protect your capital. So you guys know, right? You subscribers, the people that watch the channel, what do I say every night? I'm here to help you manage your portfolios and protect your wealth. That's because of the software, not because of what I'm saying on the YouTube channel. So just know that, okay? All right, so let's go back and dig into some more stocks. Let's go back and let's hit some of these. What time are we getting to be? 125. What are the markets doing? Market's selling off a little bit here. ES is the minis are trading back at 0325. I suspect they're going to go back under 3,800. I don't know exactly what's going to happen here, but yeah. So Jeff Lane, the software we're talking about is our software. I'm gonna do a full advertisement. Okay. This is our website. You go to Portfolio Expert, and it'll come up. This is the software here. So I'll go back to stocks, but this is how we make our living, and this is how we help you folks. So we modernize the financial framework. We do all this stuff. Go to Portfolio Expert. You can. I'm already logged in the account. There's a whole bunch of stuff that we have for you. We have dashboards, the market grid. So I'm doing the full thing. The WaveTech research tool you can get to, and then you can also go in and there's a way to set up for this Portfolio Expert website. And we have a full service here, which you'll see come up here, which is stock screens. So we go through and run these screens every month, and you'll bring up, takes a minute for it to load. But these are all different types of screens, accelerating growth. These are fundamental screens, and they've got all the attributes on here of what we do. There's all kinds of elements here. It's pretty cool stuff from that standpoint, but we've got different types of screens and things that we do. We're about investing, about running portfolios. That's what we do here. So, as I said, there's 2-week trial on the software, and on WaveTech itself, if you want to sign up for WaveTech, it's prorated by the month. There's no trial, but it's about it's $97 a month, and you can get it for basically half price right now because we prorated it to the end of the month. And if you don't want to go forward, you just cancel the account before, and you don't get charged. Anyway, thanks for that, giving me the opportunity to tell you folks about what we do. So back to the charts here, and let's take a look at. Let's go to. This is interesting. Wayfair. No one's going to stores anymore. This is one of the probably the recovery, but this has more to do with when I was covering lumber, covering copper, covering all those type of things. Really, what this is doing is just showing you, people are shopping online now. They're doing the furniture. They're doing all this stuff. It's actually a good site. I mean, a lot of folks have bought stuff. It's like the Amazon of furniture, if you will. I think it's better than Overstock and some of the other stuff that's out there. You see with this thing just blowing up here, up 10%. I don't know if there was earnings or if something came out on this, but this is the daily. If we go over to the weekly chart here, go over the weekly, it's blowing through that as well. This thing's been consolidating for some months. PPMs are still kind of mixed. So this thing is definitely set up. I would say it's got a bottom in place, but there's not a new uptrend in place just yet. And we could go back over here and just take a look and see what our models are doing on it. 1 second here. What's the symbol here? W. So let's go over and just see what we got working on this thing. Let's just put W in. Wayfair. Yeah, so right now we bought this thing. We don't have a current position. I didn't think we would have. and this is this thing is definitely in a consolidation range, and there's not a lot from a weekly mode. There's not a lot there to be able to do, and we've got a good rating on it as far as the stock goes. Maybe we could put it on a optimized daily. Yeah, optimized daily looks a little interesting. It looks like there was actually, it was interesting. There was a buy yesterday, so this stock is breaking out today. Let's go. Yeah, so it just bought day before. It looks like day before yesterday. It went long, so the stock has blown up out of this range. This is a short-term range, so a couple positive trades and a lot of whipsawing, a lot of noise, but it did catch us. PPMs are all turning up on Wayfair. So if we go back to the platform here on TradeStation, we'll see this. Let's take a look at the monthly, longer term. Yeah, so we're also at the extreme for the monthly. So we're printing extremes, but you see the 10-period moving average on a monthly basis coming up at 238. The low is 222, so it bounced right off of that level. There's not enough data here on this platform to actually calculate some things. So if I go back to Portfolio Expert and put this same symbol in here, optimize monthly, we'll be able to see this a little bit better here. From that standpoint, at least PPMs on a monthly basis are still pretty positive, and so that PPM1 on a monthly basis is up at 10, so that's a pretty positive number, plus 0.25 and plus 2.25 on PPM1, 2, and 3. So this is, so that's a pretty positive mode from that standpoint for sure. All right, so let's go back to the symbols. Let's go to daily. We got a half hour to go. Interesting. So there's obviously some news out on Intel for it to blow up like this, right? So if whoever asked for Intel, if you could, if anyone knows what's going on with this, that'd be awesome. Let's take a look at the weekly. Yeah, I just want to put this. I'm going to put this back in on a weekly basis. I want to see what our software, what our models did with this. Hang on. It looks like we had a recent buy here. Yeah, we had a buy around 50 on this thing, so we are long this thing on intermediate level. So we were out, stayed out of this thing for a while. Probably if I go to a 3-year, we'll see. Yeah, so you can see we got out, stayed out all the way through. This is the first buy signal we've had since March, since November of 19. So we bought it, we sold it on the collapse of the big collapse, and then we just rebought this thing recently. It looks like it's doing pretty good. When we go back over to this guy, we're looking at it printing up at 57 right now, so it's doing pretty good. New CEO, yeah, that's right. The guy from, yeah, I did see that announcement. Thanks. Yeah, I guess All right. Yeah, Jay, you better watch that yelling. All right. Let's keep going down the list here. Yeah, so here's the blockchain. We got the big spike RTX sell last Friday. This is weekly. We're traded down toward the, looks like just below S3, almost an STX, which is 1910. We're bouncing. This thing is set up just like Bitcoin. It's just going to go in this monster crazy ranges and we'll have to see. So this is weekly. Let's go to a daily, take a quick look at this. Yeah, same thing. RTX sell 3 days ago. This thing's probably played out. The 10 period moving average on this thing, 2084, is going to be bargain basement for this thing at the moment. But there's not a lot above 25.94 on the upside. So just look for a monster consolidation on this thing. Yeah, I remember covering BABA a number of weeks ago, and this thing's in this big downtrend. So we did get the STX buy signal here, and we moved up higher, and we're seeing it trying to bottom here. Let's go to weekly because it's kind of tough to read. Weekly trend still down. The good news is we're going to see this negative cross of the 10-week moving average under the 40. And typically when that happens, it's actually a buy signal, not a sell signal, like the golden cross and all that stuff. If you faded all of those things that you hear out there in the mainstream, you would actually do pretty well. I think they're probably 80% wrong for the most part. But yeah, so we may rally back up toward this thing on the high so far for the week has been 240, 243 is R1, so we probably played that out. R2 is 252, could continue up to that range, but you do have some negative bias, so you should probably head towards 250, 261 would be extremes on this market. I think you're going to have a hard time getting above 250 on this stock. On the downside, you're probably somewhat limited as well looking at that S1 number. So write down those weekly numbers if you're doing that. All right. Yeah, this be fun. Looking at Pfizer next on a weekly basis. That thing's come back into major support. 200-week moving average is at 35.85. So we printed into that range. Last couple of weeks we've been holding here. The 10-period moving average is still rising, so that's somewhat positive and probably act as a magnet here for prices to move back toward the maybe 37.70, possibly moving up into the grid a little bit, 38.30 on the upside. But this thing is pretty much played out. If anything, it's going to consolidate here. And this is, there'll probably be a slight bias to the upside. I would suspect somewhere around 39, 30, $40 will be the upside limitation on this. Pretty amazing. I'm bringing up Disney here, and amazing that Disney was able to get this thing printing up without, for the most part, for the amusement parks being closed down. I love it, Charmatic. What stock? Anyway, yeah, so we got DIS, RTXL, two weeks sideways, back up again, but locked in the range. So this thing is won't do much until this 10-period moving average catches up with this thing, 163, 159, about $4 per week. So around probably 170, 168 is going to be bargain price on this. But even then, this thing is going to be constrained at this higher end of this range. We got the 2 weeks, we popped a new high. Now we're fading sideways again. I just don't see a lot. If you owned it from a while back, then you can, like I said before, you can put maybe some vertical spreads on it or something that might do okay from there. All right, keep going. CIF, MFS, intermediate income. Yeah, this thing's like flatlined right along the 200-week moving average here. Not a lot going on there. Let me bring it up over here. Let's go over to the Portfolio Expert platform and Colonial Intermediate. Yeah, we've had that on for a while, back on July, and this is something I was talking to one of our institutional clients the other day, and one of the things that we were talking about was that a lot of the trades that came out of the WaveTech and Portfolio Expert that came out in July have been really good trades. They were kind of the midpoint. Weren't trying to catch the low, but we wanted to catch the way that the platform works is we're trying to find when these intermediate trends are going to move, and typically the models hold for like 200 days. So this is pretty classic. We're still climbing at that trend, and this crossover that we saw with these moving averages is really kind of that midpoint of the trend. So there's probably another level on this thing to the upside, and I suspect that this will continue to consolidate here, but we have some potential for some upside. And interesting enough, in spite of the analysis I did earlier on the yields, this thing looks pretty good. So here we are at FedEx. FedEx is declining. We got PPM1 at a negative 1.03. PPM2 is positive, so we should rebound back toward the 263, 270 level, as long as we hold the lows of last week, which was 242. So we stay above 242, you should move back toward 270 on this stock here. It'd be interesting. I'm just going to go back and forth and put in FDX over here. And it's interesting that we bought this one way back on 5/29 on a weekly basis of last year. So we've had this trade on for a while. We're still holding this. Looks like an ABC fourth wave here. Typically, we're going to try to buy into wave 3. The program itself is actually looking at finding the wave 3s, which is the strongest sequence. So we'll see if they can hang through here, see what consolidation, and see if there's a wave 5 that it's going to participate in. The PPMs are fading, but PPM1 is turning up here. PPM2 is still positive, but PPM3 has a nice upward slope to it. So this thing looks like it's in pretty good shape. I guess if I wanted to we can turn that into a candlestick chart. That'll make it a little better there. But yeah, so that's a pretty good trade, but it's a trade that's reasonably mature from the standpoint of the trend itself. So it's backfilling on an intermediate basis, and on a short-term basis, maybe we can see if there's some kind of bottom setting up. Yeah, it's trying to set up a bottom. So this is probably, like I said, an ABC pattern that's setting up, and that is exactly how it should be setting up here, is that it's going to move back into 264, 275. Basically, the analysis that I did a minute ago is spot on, as they say. Yeah, I brought up Airbnb. Not a lot there. Let me go over to our platform, just see if I can. We might have. Yeah, let's bring it up here. This is weekly. Let me bring it up daily. I just want to see if we have anything going on in the modeling. Yeah, there's not a lot of data on this thing. That's pretty much it. So not a lot to go on. We are seeing it uptick here in the pattern, and yeah, just not a lot there as far as anything goes. We do have a buy on it at around 145, it looks like. So we're long at 145 and change, so it's still moving higher here. We're up 6.16% on this thing. Yeah. Okay, that's funny. Yeah, GME. That's so funny that you grabbed that one. Charmatic. That's really funny. So yeah, I wanted to cover that actually. I'm glad that. So GME, GameStop, is blowing up right now. Let me bring it up on this other platform first. So this is, it's come off the highs a little bit, but it's printing up some pretty good numbers here, up 60%. Yeah, so I put a model 1.2 on it, bought it at 2017 on a daily basis. I think if I move this over to a weekly, I think it bought at 450. Yeah, $4.50 intermediate. So it's up a gazillion percent. Was up 377 as of yesterday. So it's up way more, being up 60% today. But yeah, so but this chart, you see the PPMs on a weekly basis exploding up. All that stuff's happening, and that's pretty significant. And if I go over here and just change this to optimize weekly, you'll see this thing here, that where I put the down at the bottom here is where this thing bought. Let me look at yeah, here it is right here at 450. So it's still long this, and now it's trading 32, so it's up big numbers again today. So as far as targets go, and on this stock, I don't think there's going to be anything, but let's take a look. Nope, nothing there. So I didn't suspect so, but let's go to daily real quick. Yep. The only thing that we got on a Fibonacci, we did get objectives over here down in this base. We got objectives on the upside for a move to 21 to 23, which is interesting. Is pretty much where we were buying it on the trend level. So we went sideways here, and now we've blown up. So it'll be interesting to see how this thing holds together on. Yeah. So yeah, so that is an RXD sell, exactly. What's going to happen, though, this is going to be interesting. See if I can attempt to draw this in. This is what's going to happen with this market grid. This won't be very, this thing is going to shoot up like this. And so the next bar that comes in here most likely will be within this bar. I didn't draw it very good, but this thing is going to expand up vertically. Maybe we can relate it back to this pattern over here on the right when it did this. This is exactly how it should look coming in tomorrow. If you look at, I'm going to move this over right here to the middle, and you'll see where we had the RXT sell. We got a spike up, and then it went sideways for 2 to 3 days, and then it did move higher. It's going to form what I call the dragon head. So once that happens, you get the consolidation. You can have an upward slope to it like we did here. This is the daily pattern that's set up, but it should be similar. What we're going to see on this pattern tomorrow will be similar to that one on a much larger scale. Maybe not, though, because the previous day it was $9 to $9 to 13. So yeah, it's going to be very similar. So this pattern over here is going to look very similar as we come in tomorrow with the. That's why I was trying to draw in how this next bar would come in. So I can try. If I try another stab at that, then what would happen is we should get a spike above this range, because what happens is this last 3 bars are going to dominate what the projections are for the market grid. Okay, just taking a look here. What time we got? 53. Let's go over and watch the futures. Let's go into the close here, see what's going on. So we're back at 0575. I thought we might go out under 3,800. Looks like they're holding it so far. So I'll stay on the screen with you folks, but I'm looking at the patterns they're setting up as we come into the close. Looks like they're going to try to sell it a little bit. I don't know if we're going to get it under 3,800 or not, but it does look like they're trying to sell it off here just a touch. We're up 11 handles, 0.29. There's just not the momentum on the upside, and I'm not sure what's going to drive it. And somebody made a comment earlier in on the stream that Biden's going to announce his stimulus plan. Well, it's amazing that he never said anything about anything, but he did get elected, and now he's going to tell us what he's going to do. So sort of like remember the what was it, the healthcare bill? You had to pass it to find out what's in it. Same kind of thing. You had to elect Joe Biden to find out what he's going to do. So we'll see how this all plays out for sure. So they're starting to get a little selling here. Like I said, My original thoughts were we'd get under 3,800. It doesn't look like that's going to be the case for today. I don't think it's going to get that much selling. They're trying to sell it down, but there doesn't seem to be any enthusiasm, at least yet. We have about 5 minutes to go. And I agree, all stimulus has not helped. I'm just reading the timeline here a little bit. Yeah, they're just kind of bouncing around here. It looks to me the 0275 is going to be the pivot point for a sell-off, and we're printing 475. If we get below 275, then we could see some selling, and maybe we'll get my below 3,800 sell. But for right now, it's looking a little stable as it goes right now. Yeah, you know what? I'm gonna do that real quick. Somebody asked for Neo. I'm gonna do Neo. Just while we're waiting for this close, it looks pretty boring. So Neo RXT sell 2 days ago. We're up a little bit. This is daily. The trend that's going on here is it's very positive. PPM1 plus 2.98, PPM2 1.95, and plus 0.91 on a daily. So this is pretty positive. There is longer term projections are suggesting 70, minimum 70, possibility of 82, 89 on the upside. Let's take a look at the weekly. Weekly is more or less, this has been a big mover for a while, I know. And we're continuing. We got an RXT sell last Friday, but we're up much higher. So I'd watch for this thing to move back just because of that number. Be careful and watch out for a 57 print. Not sure what you're doing with it, but watch out for 57 print, maybe a 55 before Friday. If we do close here, then we'll see that probably something like that early next week. Looks like this thing's played out pretty good again. We saw the same pattern over here. I remember looking at that. I would look ultimately for this thing to trade back towards the 10-week moving average. Yeah, Lemonade, I just brought that up weekly. Very similar pattern. Let's go to a daily real quick. How are we doing here on the markets? We're in the final minute. Let me flop over and I'll go back to this. Final minute here, 450. So like I said, we're pretty stable. Looks like they might print it down. Here's 375. So we're starting to get a little selling coming into the close, this final minute. We'll get the bell here in just a minute, or less than a minute. 0350 has been the low print so far, maybe 25. And what'll be interesting is the minute after this close, see if there's any further liquidation. 350 trades again. I think 25 was the low there. Yeah, 350 was the low. Here we are again, 350s, 325s, 3 even, 275s. There it is, right on the close, 225. So we did print them down into the close. We'll see if there's any follow through. We'll watch this for another minute, then we'll come back up. What was the low print there? Low print was 175 on that sell-off in the first minute. So it looks like they could form a little downtrend. Maybe they'll print them back under 3,800, but we'll see. Yeah, so I'm bringing up plug power, and I've got a signal on here. We did get a wave tech buy here at 51.98 4 days ago on this little breakout. If we go to a intermediate chart, we actually bought plug at 7.07. We're still long this, but we're breaking. It's interesting. We're getting this double breakout where this thing is just exploding. Is this a battery company? Is that what these folks do? Cindy, give me a shout out on that. But yeah, so this is one of those runaways. If you own it, be glad you do. Hopefully you own it before a few minutes ago. If you own it over the last 2 weeks, you're doing pretty well. Like I said, our models bought it at 7.07, and okay. Fuel cells. Okay. See, that's right. It's interesting because I mentioned, I think last week, I mentioned the Natural Capitalism book, and I don't know if any of you looked into that, but that was their entire premise. This book was written in 2000, I believe. It might have been late 99, and I put it up on the screen last time. I think ultimately Tesla might lead the way to hydrogen, because hydrogen is a much better solution by far. There's no doubt. So that's I love the hydrogen. Oh, okay, cool. Yeah, I think it's an interesting read. It's like I said, I'm going to go back and revisit it. I literally have not read the book. I put it up on screen. Like I said, if I was a good YouTuber, man, I'd have me an affiliate link so I could. But let's see here. Bear with me 1 second, folks. Yeah, I brought this up last time. I'll put it on screen for you. This is the book, Natural Capitalism, and that was not good. But yeah, so creating the next industrial revolution. And it's interesting that their premise was hydrogen. I talked about this last time, but this is worth a read. Does it say what year it was published? Let's see here. Just looking for a published date. Just maybe it's on the screen. I'm looking around trying to find it. But yeah, so I think it was 99 or right at 2000. I read this book many, many years ago and thought it was interesting. And it's all about hydrogen. The funny thing, though, the thing that they are completely wrong about, if you will, is that they were wrong about the suburbs. This is interesting. The suburbs were all going to move into cities, and we're going to live in high density living. And it was going to be there's a couple models that they talk about, and this was tried. COVID changed all that. Everybody's getting the hell out of the cities and moving, so the urban sprawl is back on. So they're completely wrong. You'll see if you get the book on that. But I think the hydrogen is the true way, way better than electric. As I pointed out for many times, if you happen to live in the Phoenix metro area, and live in Arizona, we are hydrogen powered and nuclear powered here. So we're about as green as you can get as far as not burning coal or natural gas. And we have monster solar panels out. If you drive from Phoenix to LA, you can't miss them, trust me. There's several miles of that stuff out there. And so it depends on where you live, whether a Tesla is actually a benefit, because there's some, depends on how you're charging your car if you're electric. So electric itself is not necessarily eliminating the emissions as, it's not everything it's pumped up to be, but hydrogen is, I think. And it'll be interesting to see what comes out. Let's see here. Yeah, Steve Weiser, yeah, that's if they do that. That'll be interesting. Yeah, no, I can't argue with you, Steve, on that. Yeah, maybe there's still a play there. Maybe they got it right from that standpoint. Yeah, so what Steve's saying on the line is that when they tax individual housing much higher, it'll move people back to the cities, and that'll be interesting. And then they'll kill the individual housing going part of the Green New Deal. So the whole MMT thing, I promise you, I think I may just do a live stream because it's going to be a good way to talk about it. It takes a lot. I'm super impressed with people out on the internet that produce these amazing videos and cover some of these subjects. I'd love to be able to do that. I just don't have the skills, the time, those type to be able to do that, because I think I've got a pretty good handle on some of these issues out there, and I'm going to do my best to try to do some of these things. And I struggle, and I really thank everybody for coming to the live stream today. But I struggle with a lot of things that are I think important for me and what I'm trying to do with the channel, with our software, with everything we're trying to do, is that the videos, they eat up a lot of time. Ask anybody that runs a YouTube channel and tries to run anything else. It's a big deal. So I appreciate everybody's support. If you haven't hit the like button, do that, because that'll make me at least feel good. Just trying to see if there's anything else flowing on out there. Looks like the comments have stopped for the most part. But yeah, I think yeah, I agree with everybody what they're contacting on. Yeah, so somebody has, there's an RXD cell unplugged, so maybe wait a bit. Yeah, if you don't already own this thing, Cindy, be very careful. I don't know that I would cover it, but you could do a partial. One of my old buddies on the trading floor used to always say, you have to trick the market gods and make them think you got out. So he always used to say, never celebrate a trade. So if you're going, man, look at this, and you're slapping, look how good I am, how lucky I am. He goes, you better be selling something. And if in the case of, if it feels really good, then maybe you could take some off the table, look for it to retrace back into that range. Hopefully you'll come to next week's live stream and we can cover it again. If not, I don't know, Cindy, are you a subscriber to WaveTech or anything like that? That might be, that's maybe some of the short-term signals would be helpful. So that's about all I can offer you. There's no way to cover all these things. We cover actually on the WaveTech platform, we actually cover about 16,500 symbols in the database. So yeah, I'll just put that screen up there. So if you did want to look at it, I'm going to close down the show. And oh, ouch. Okay, Ram. Yeah, thanks. Yeah. Now you might get a chance to get out, but yeah. Hopefully you shorted it today. So yeah, so I'm going to go ahead and shut down the live stream. I appreciate everybody for watching today, and you know, a couple things. If you signed up for WaveTech, you can also do you can do something else if you just want to be aware of what we're doing. Is you can go to the kendallreport.com right here, and I'll put that back up. And you can just sign up so you can get notified of anything we're doing and stuff like that. We don't spam you. Matter of fact, we don't communicate super often, but when we do, it's something that we think you'd be interested in. So it's not, you're not going to get bombarded with 8 emails a day. But this is a place you can go to, kendallreport.com, and you can sign up there. So, okay, folks, thanks again for watching. Really appreciate it. Have a great evening. And as usual, we'll see you again tonight on the daily video. Thanks again.